Quarterly estimated tax payments, as unfun as they may be, are actually pretty simple. But if you're anything like me, there are a few what ifs and how exactly do yous that you're probably trying to wrap your head around, which is why you're watching this video right now. So I'm going to share a conversation I had with Garrett Alexander, a CPA and partner at Game On Financial, where we unpack the who's, what's, and when's of quarterly taxes. But first, a quick recipe for a super simple tax strategy that you can use, especially if you're just getting started out, especially if you're not quite sure how much income you're going to bring in to know how much taxes you're going to need to pay. Step 1, open a separate bank account specifically for taxes. Step 2, every time you get paid, set aside 20 to 30% of your income into this new account. And if you live in a state where you have to pay state income taxes, you might consider opening a separate account for that as well and save whatever your state tax rate is. Step 3, set a calendar reminder for each of the tax payment due dates. Here's a screenshot directly from the IRS's website. And then every quarter, just pay out whatever is sitting in these accounts to the powers that be. And you're done. Now, you might end up overpaying using this strategy, but you'll get it back as a refund. You avoid underpayment penalties, and you can fine-tune your tax withholdings as you get a better idea of your actual income, expenses, and tax liability. I highly recommend checking out Relay for your business banking needs, not just because they are the sponsor of today's video and they pay me a little something to give them a shout out, but because I legit love their platform and they make this strategy I just taught you super easy. You can open and manage all the accounts you need without having to worry about minimum balance requirements, and you can use their auto transfer rule to automatically divvy up your income by percentage into your separate tax accounts. And if you use my link, sidekick.show/relay, to open a new account and fund it with any amount of money, it could just be a few bucks, they'll pay a little sign-up bonus because they're cool like that. Also, I couldn't have made this video without Relay because they're the ones who connected me with Garrett through their new advisors directory. So if you find yourself in need of some additional tax and accounting assistance, Relay can help connect you with a vetted financial pro to get your questions answered and keep your business moving in the right direction. Now, without further ado, let's talk with Garrett. Let's talk about quarterly estimated payments. What should people understand about them? Who needs to make them? Should they make them themselves, or should they hire a tax professional to help take care of that?
Yeah, that's a great question. And probably one of the more common ones we get from potential clients is asking, should I be paying quarterly estimates or not? Really, it comes down to how much self-employment income you're going to have that you're not having withholdings on, right? So from a W-2 job, if you're just working a job, your employer is withholding taxes on your behalf and remitting those to the IRS, and even the state. That's great. When you're self-employed, that doesn't happen. So where does the tax money come from? When do you pay that in? You can wait until the end of the year or wait till tax time and pay it then. But what's going to happen is the IRS is probably going to hit you with underpayment penalties and then interest on that amount. You don't want to pay underpayment penalties. To avoid that, you can pay quarterly estimates. A good rule of thumb, generally speaking, if I know nothing else about a client, is I would say you need to be saving somewhere between 20 to 25% of whatever your self-employment earnings are. So whatever your business income is, you need to be saving some percentage of that and maybe even a little bit extra for the state, depending on the state that you're in. But save that money, and then every quarter, once a quarter, so April 15th, for example, is the due date of the first quarterly estimated tax payment. Log on to IRS Direct Pay. We may even be able to link that down below, but IRS Direct Pay, you can pay it online right there as an estimated tax payment and just pay it in quarterly. Doing that while you'll still owe effectively the same amount of tax throughout the year as you would if you just waited until tax season next year, you can avoid paying the underpayment penalty, which can, obviously add up. If you're paying $20,000 in tax and then you have an underpayment penalty of $2,000, right? That's pretty steep. If we can avoid that just by paying throughout the year as we go, we should probably do that. So again, general rule of thumb, if I didn't know anything else about you, I would say save some 20 to 25% of your business income and put it in a bank account. And then once a quarter, you need to pay that in as a quarterly estimated tax payment.
And you need to do this for your state as well, correct?
Do it for the state as well. If you're not in, Texas, Florida, one of the states where there is no income tax, right? You don't have to do it there. But I'm in Georgia.
Unfortunately, Pennsylvania, yeah.
Yeah, I'm in Georgia. I have to do it. But if you're in Florida, you don't have to worry about the state income piece.
It sounds like a major bummer, but understand you're avoiding having to pay a penalty. And also, you're not paying more money necessarily. You're just paying the taxes that are due. And there's a chance that it might come back to you if there was an overpayment. Now, if there was somebody like me who has variable income throughout the year, what would be a good way to kind of figure out your quarterly payments in that case? Sometimes I might get a big project in the fall, but then revenue's pretty skimpy in the winter.
Sure. Two methods. One, if you're truly unsure how to do this, you could just ballpark what you estimate your total annual income is going to be. So if you think you're going to make $100,000, right, and so you say, okay, well, I want to pay in 20,000 of that to the government. Well, 20,000 divided by 4 would get you the quarterly amounts, right? 5,000 every quarter. If you're unsure of what your annual income is going to be, and maybe even like if you're just starting and this thing could ramp up really quick, or it could take you a year to start really developing some income, you could just go quarter by quarter, right? You get through one quarter, you made 10K, so put 20% or $2,000, pay that in as a quarterly estimate. And then next quarter, maybe you make 50K. Same thing, pay in 20% of the 50K. Ultimately, you can do it as you go. Really, you can do this in any interval that you choose. You just need to basically take whatever you think your estimated annual income is going to be, multiply it by 20%, and then divide by 4 to get that quarterly payment paid in. Maybe I made that too complicated. You need to
No, I mean, I guess another way to do this, like quarter by quarter, if you're using a method like profit first and you're automatically setting aside a portion of your revenue, then once you get to, you set a reminder on your calendar, it's time to make a payment, and you just empty out whatever's in your tax account to make a payment to the IRS.
Yeah, that's a great method. In fact, profit first is what we use for our business, and it does save us a lot of time. But yeah, I mean, really any budgeting method that you want to use, just saving up enough money in that tax account, or just whatever you can. I know it can be lean at first, and it's really hard to save that extra money, but any amount that you can pay as a quarterly estimate to get something paid in, that will take off of that, underestimated tax penalty at the end of the year. So paying something is better than nothing. But yeah, I mean, profit first is a great method for doing that as well.
See, it's not that scary. It's not that hard.
It's not that bad.
But it's nice to hear a tax professional affirming that. And if it does get really scary and hard, you can always, call in the cavalry and have somebody like Garrett help you out navigating all of those complexities. But it's not that complex. Don't be scared. Make your estimated payments. Thank you, Garrett. Hey, if you want more awesome, helpful tax advice, be sure to check out the full interview that Garrett and I just had, and we dig into a lot more helpful tips and tactics to help you stay compliant and save money for your small business.